Many of us want to support our families, both near and far, helping with expenses for things like rent, food, or education. It is a wonderful way to show you care and contribute to their well-being. But when tax season rolls around, a common question pops up. Can you actually deduct that financial help on your taxes and potentially save some money? Generally speaking, directly writing off financial help you provide to relatives on your taxes as a deduction is not allowed by the Internal Revenue Service. Most monetary gifts or support payments to family members are considered personal expenses and are therefore not tax-deductible for the giver. While this might be disappointing, it is important to understand the specific rules that apply. The core reason for this rule lies in the distinction between a personal gift and a tax-deductible expense or charitable contribution. The Internal Revenue Service considers money given to relatives as a personal gift or support, not a business expense or an eligible charitable donation. There is no broad tax deduction for general financial assistance to family members, regardless of their financial situation or your good intentions. This policy prevents individuals from converting personal expenses into tax write-offs. However, there are a few very specific situations where your financial support might indirectly provide a tax benefit. The most common scenario is if the relative you are supporting qualifies as your dependent. If someone is your dependent, you may be able to claim them on your tax return, which can unlock various tax benefits like the child tax credit or the credit for other dependents. To qualify as a dependent, your relative must meet several criteria, including a relationship test, a residency test, an age test if applicable, and most importantly, a support test where you provide more than half of their total support for the year, and they meet certain gross income limitations. Another interesting consideration is related to medical expenses. If you pay for medical care for a relative who could have been your dependent, even if they do not meet the gross income or joint return tests to actually be your dependent, those medical payments can sometimes be included in your own itemized medical expense deductions. This is a nuanced area, but it provides a potential avenue for some relief. Additionally, while not a direct deduction for you, if your financial support exceeds the annual gift tax exclusion amount for a single recipient, which is $16,000 per person for 2020 and $17,000 for 2023, you would need to file a gift tax return. However, this usually does not result in you owing gift tax unless you exceed your lifetime exemption amount, which is much higher. Understanding these rules helps you navigate your financial contributions to family members with clarity. While general financial help is not deductible, exploring dependency status or specific medical expense payments can sometimes offer unexpected tax advantages. Always keep meticulous records of any significant financial support you provide and be prepared to review the Internal Revenue Service dependency rules carefully to see if your relative might qualify. This careful planning ensures you are making informed decisions about your family's financial well-being and your own tax situation.